Hello, Warriors. Dale Pinkert here at TradeGate Hub. How's everyone doing today? What a great day to be a bear. So, I've been prepping you for these moves since we started up again here at TradeGate Hub. Last Monday, I've been pretty bearish. Yes, I know I'm live. Okay. So, thank you everyone for being here. I want to encourage you, if you're watching us on YouTube, before I get to the markets, that you give us a like on the video. It helps with the algo. Also, if you want to engage, that's fine. But you're only getting part of the picture during this 30-minute broadcast live stream of my analysis live. I also post in the main chat room, in the main room, to update you on my ideas. So let's start with what I talked about yesterday and put out a recommendation to sell silver at 27.76. Silver now trading, about 58 cents underneath it. And, the market sometimes can be like dominoes. So yesterday was the silver that, failed from, even though we traded above 61.8 back, we failed from there. And, you can't rule out a move. I was looking for maybe 60 for a pop to sell. We didn't get there, but that's why when you trade, you only take partials and you hold something. So you should be in a profit stop now on the silver. What's really caving today is gold. And yesterday I said I thought that we would see one more high, and it just fell short of that one more high. This, I believe, was yesterday. And you almost had like a little three drive formation. And what was all this predicated upon? It was predicated upon the reversal that we had in yields on Friday after a shockingly weak number on the NFP of 250,000 jobs, when the whole market was looking for 1 million plus. So we're getting follow through to the upside in yields, 162. It's my contention that we're going to make new highs in yields, and that's not going to take that much. All we did was move sideways after a real dramatic tripling of 10-year yield rates. And, this may be the panic. I think we get one more high, and then we could look for rates to come off a little bit. Maybe this is a wave 4. I know enough Elliott wave and theory to be dangerous, so don't trust me when I say it. I know some of the simple aspects of it, but definitely not the complex. So, but to me, what's important and what you know about a market is how far and how fast does it get from point A to point B. Okay, so I mean, this was a pretty impulsive move from the lows, and even though we got pretty overbought over 80 here, and all we've done is correct in time. Okay, there's a big difference in correcting in time rather than price. Price would have been some type of pullback after this advance. You would have had some type of fib retrace, but it really gave up little ground. And, so this to me is a sign of strength, not a sign of a top that after a huge move to the upside, you can't even generate a 38% correction. Now, that'll happen if we take out Friday's lows, but I still think that we're going to make new highs. In fact, yesterday, the S&Ps finally gave up the ghost, right? NASDAQ, I've been pounding the table on for weeks now. It's underperformance, but there was a point yesterday during the market where you had NASDAQ down 1.8%. That was before it took out these lows. So the potential failing rally I spoke about in NASDAQ from Friday's employment number, again, so the market recognizing that maybe this number is a one-off number because of how yields are acting. Otherwise, we probably would be under 150 in the 10-year rather than 162.5 on our way to new highs. So NASDAQ has led it. In fact, NASDAQ was down about 1.8% at one stage yesterday, and the S&Ps were unchanged, down maybe 0.25%, and then late in the session finally gave up the ghost. And you could see the S&Ps are still much stronger than the NASDAQ, right? Because see this low? The NASDAQ clearly took it out by a mile. Okay, so now we could get some type of reflex rally here. I'm even starting to see some potential divergent short term. It's not ideal, it's under 30, but don't chase markets. Okay, let them come to you. You know, if you weren't bearish up here and short, don't start getting bearish down here, especially when RSI is not confirming like it isn't here. So this is a divergent low on the 15-minute time frame. That's usually the first. Even have some divergence on the 1 hour. It's pretty obvious. So I mean, maybe Nasdaq gets a rally back to prior double bottom here, but I think the case is coming off that, um, you know, we're going to make another new high. I don't know how Nasdaq's going to be able to resurrect itself. Maybe the S&Ps can, but Nasdaq, you know, we're making successive lower highs here. So it would surprise me, and you would need something like 4,300 in the S&Ps. And you know, maybe what's going to happen is what a lot of people or some people thought for the first time in many years, sell in May and walk away may end up being the right thing to do, or better yet, get short. Here's the recommendation I made last week to take advantage of NASDAQ weakness. It's triple short SQQ, and this is where we were when I was talking about it. So you have a breakout at 12. You know, is it going to pull back? Now you know you're wrong over, you know, back under a 12 close. I wouldn't stay with it. And if you got long last week, nothing wrong with taking something off the table, 15, 20% on just this on the ETF. If you're, you know, crave more leverage than even this, a 3 times bearish instrument on the triple Qs, you could buy calls on them, which is, you know, something else I did, buying 12 calls. So pretty important. I don't know how we're going to get new lows out of this right now. You know, I could see reactions, but it held right where it had to at 11, and this is the last couple days. So if you think you're late, it's just beginning. So here's your daily, and we're gapping over the 50-day here at 1247. Why can't we see in a decent 4 to 7 week correction this instrument attack its 200-day moving average at 1824? So that's a possibility to keep in mind. Yesterday I was talking about euro, and I said, you know, it had too much momentum for me to be interested in trying it, the RSI. And I don't believe this made a new high. Oh yeah, it looks like it did by a few pips. Okay, so we're getting our first divergence. The high here is 121.81.8, 78.5, 78.9. So yeah, by 3 pips, which reminds me, never put your stops a pip above a high in case it turns out to be a stop hunt. So we'll see. I mean, this could be it. I was disciplined. I'm being disciplined and waiting to see if I get a test of this wedge line up here, which will be coming in over 122, maybe 100 higher. Looks like 22.20, 22 and a half. And as you can see, you see the divergence here too, because we did make new highs, although marginally here. But, you know, I'm not going to short it yet. I'm not ready to do it. Although, you know, really, when you think about it, the dollar really is weak because we've had risk off going on in NASDAQ for quite some time. And yesterday, there was no flight to quality. Something else I talked about. I'm looking for new lows in the bonds. And here's the TLT. So, when you get your new highs in the 10-year, I expect we're going to have new lows here. So there was absolutely no flight to quality yesterday into treasuries at all. And the dollar really didn't catch a bid either. So, interesting environment, the things that you think money will go to when the S&Ps are down 44 and NASDAQ already 900 points off its high. And in just a few days, S&Ps are 100 handles off the high that we made the other day. So would you say that's pretty quick, directional, impulsive? I would. So let me just show you. So from here, look how quickly we covered all this ground. Look at all the levels that we're about to test and take out. Oh, what I wanted to point out on stock indexes, and it's important. I'll get to the currencies and some of the outside markets as well. But what I wanted to show you is that 4175 up here is going to be important, not because these moving averages are here, but I use a simple, very simple system of 2-week reversals. Here, I'll show you how you do it. So they're important to me. And this week with this red candle here, all you do is you count back 2 candles from the present week, 1, 2, and weekly candles aren't finished till Friday, right? So we're underneath this week's off number. It's 4175. Okay, we're trading 33 handles underneath it. So if by Friday on the close we're under 4175, that'll be the first 2-week reversal signal in quite some time, all the way up. So I do think there's a chance that we could see 3,000 in the S&Ps. I don't. I think it's going to happen overnight, but it could happen through the summer. And you know what? I won't rule out. The S&P's trying to march up. I know guys looking for 4,300, 4,400. I put out the shorts at 42.12 and traded it. But my hold is going to be in these SQQs. So they're not, to me, it's not leverage. So I like these ETFs. So take partial profits and protect the rest of your position. Closes back under 12, something else is happening. Okay. Everyone with me? All right, so we'll get back to the currency. So I'm still going to try and be patient in the euro here, because if it's not acting that bad with all this pressure, what happens if stock indexes bounce? Okay, so that's a possibility. They bounce, and maybe that just, if the euro isn't down 40 on a day like this, what's going to happen when say the S&Ps recover and attempt to retrace this initial sell-off? So I'm going to stay patient with it and see if we could have one more divergence under 70, may pull back. But right now I'm pretty neutral. I'm flat. Pound had a great day yesterday. Still nothing I want to do. EG bouncing a little bit after being slaughtered yesterday. So still believe euro's your preferred short and the pound is your preferred long when you're bearish the dollar. So we'll see if this turns into a higher low. This pretty big candle. I don't know if it was the climax, but right now it looks like the path of least resistance in euro pound is lower. So that makes the euro the preferred short when I'm bullish the dollar and think the dollar is going to rally, and makes the pound my preferred long when I think the dollar is going to sell off. Hey, good morning. How you guys doing there in the room? Nice to see you guys here. Okay, so that's my look in euro pound. The commodity currencies, you know, failed to make a new high. It's possible we go up here for a three. I can't. I don't have to know what it's going to do. Really, all I have to know is one instrument, what it's going to do. And even though I cover all of these, I just want to tell you guys a story. And that kind of, if you're having trouble being a portfolio type trader with multiple positions on all the time, I can tell you that I know guys from Chicago that were cattle traders that never left the cattle pit. Okay, they didn't diversify into hogs and pork bellies and into gold or currency. They knew one market like the back of their hand, and you know that same thing can work for you outside of a trading pit in your house or wherever you trade. 1820s. Uh, you know, uh, I'm really thinking that this action in gold, uh, that may have been it. See, we still kind of have a confirmed high here, and we didn't quite get to this level. But I think that the gold might be vulnerable here, just like I think silver might be vulnerable here. I mean, it is an uptrend, but I don't like the grinding nature. It looks like everything's corrective here. And why couldn't we have one more shot down in silver, clean out all the bulls under 23, and then march to $50? Why can't gold, especially, I mean, this is your line in the sand right now, 1760. So this is where we launched from. But I traded the short side of silver yesterday, and I'm going to see what happens here over the shorter term. Now silver looks like you may be a little head and shoulders. In fact, there's an interesting pattern. We could still go to new highs because of why. What makes me think we could go to new highs on the 2 hour? See that? Confirmed high. So it could, but you have a nice little head and shoulders formation here. Right here. Right. So we'll see what that manifests into. Gold also confirmed up there. So there we are, 27.22. I want to talk about the other call I made yesterday. Also talked about it in chat. I think it's very possible that Bitcoin's rolling over here. Back under 54, to me, I think we'll see some acceleration. This looks like corrective. This whole thing right here looks corrective. You had your first break, and this looks like a failing rally. I'm wrong on action back over 60 grand. Yeah, so the NDX, it's great to see some participation. And guys, you know what you can do? You could also post charts in here and we could discuss them because we're going to build a mastermind group in here. Okay? So when you say it's an interesting spot to sell NDX, post the chart. What do you think? And we'll attract a lot of great traders in here, and we'll have a mastermind group in here. Good idea? It's not a theory. I've done it before. I've done it before. We're going to do this. Okay. So tell your trader friends to come in here. And instead of me just giving a lecture, it's two-way. And, I could always give you the microphone too. If you have some things that you want to share, we could get you some sound and you could show us and explain what you're seeing. So that's going to be the purpose of, what I want to build here at TradeGate Hub is a community of traders that all share their work with each other, that I provide my views, and you provide your views. And the great thing about a community is that we all only have two eyes, right? And you don't know how many, and I interview a lot of real good traders too. In fact, I'm bringing one in who believes the top is in the S&Ps. I've interviewed him here on TradeGate Hub once before, Ben Maldonado. He does a lot of market geometry. That'll be Thursday. So right off the gun on Thursday, we're going to have Ben Maldonado. I'm going to bring my network of people that I've interviewed over the last 5-6 years, and there are hundreds of them. And besides us collaborating, I'm going to bring in guys that are good, that are going to give you some content and some looks and ideas for you to take into consideration in your trading. So I don't know about you, but when I see someone that, say, for example, they use harmonics and they're seeing the same thing I'm seeing, actually, and I've watched their work for a while, actually gives me more confidence. Mike, like Mike, to collaborate with a guy like Michael. So, uh, only have a little bit of time left, so I just wanted to point out that I think Bitcoin could be rolling over. I think this will probably uh, seal it. We start taking out this right there. And if we break down under, say, 54,000 with a closing candle, I think it opens a door for a move back down to the 200-day moving average. Okay. And let's see. So gold's fighting its way back. I'm a bear. I think there's one more big break in gold, one more break in silver. And I think it's just going to be, if I'm right about where I think the NASDAQ can go and where the S&P can go, then I think everything's going to come down with it. Because think about it, and I'm going to wrap with this thought. Okay, so let's look at some weekly charts. Okay, let's go back to the COVID crash. So S&P's up, right? Silver up, right? Oil up, right? Okay, everyone see that? What do you want me? What else do you want me to go to? It's all one market. There's hardly any differentiation between asset classes. It's like blowing up a balloon and everything rises with it, the flood of money, and everything will go down together. I'm pretty sure, because it'll be a lack of liquidity and people trying to raise cash, and they'll sell the kitchen sink to do it. Give me a why if you're with me and you understand my narrative. of all one market. Commodities, stocks, real estate, the euro, everything went up together. The only difference is magnitude, right? It's only magnitude. So it'll be the same way on the way down. I think your best short is NASDAQ. I think it'll give up more ground than the S&Ps, and I think it'll give up more ground than gold and more ground than the euro. So that's a narrative I'm going to be working with, especially until I think yields have peaked. So with that being said, I hope I've given you guys some food for thought here. Remember 4175 to have a 2-week reversal in the S&Ps. NASDAQ has been signaling it for 1, 2, 3, almost a month. The NASDAQ was a month ahead of it. So why can't we go to 12,000 for starters? And 4,100 is big to people. You know, maybe they try and hold it, but why not 3,600? And you know how important 3,600 is, right? I mean, that was a big level. It was right here. There was a battle fought at 36, and we never got back to it. But some of the bears have counts down to 3,000 in a hurry. Okay. So, like I end all my broadcasts, don't just count your pips, count your blessings. Learn how to be a bear. We have gravity in the US stock markets being led by NASDAQ. The only other constructive scenario I could see is that this is a 1 and this is a 2, and we hold here and get a 3. You're very welcome. So don't just count your pips, count your blessings, guys. And I'll see you guys tomorrow, and then mark it in your calendar. You're very welcome, H. Faraz. And for Ben Maldonado, at Ben Maldonado on Twitter. My Twitter handle is at Forex Stop Hunter, and glad to be able to share my ideas with you guys. It's my mission to build up and edify traders every day. So Gil doesn't know when I'm going to end the show because, you know, it looks like I'm ending and then I start talking again, right? You're welcome, Francisco. Tell your friends about this. I'll be here Monday through Thursday, these hours. Okay? And I'll see everyone tomorrow.